Certainly been talking about that 2-year anniversary of the bull market. And of course, technology remains the fastest growing sector since bear market lows back in 2022, up nearly 120%. But our next guest says the sector does face two key issues ahead: antitrust scrutiny and as well as generative AI. Elevation Partners founder Roger McNamee joins us now. Roger, let's just start off on generative AI, continue a conversation we've had a couple of times now. You know, You've at least questioned some of the use cases and whether or not it's really making, and I don't want to put words in your mouth, but making any real progress in the enterprise. On what do you base sort of that lack of confidence in generative AI?
Yeah, so, David, the context for this is really simple, which is that fundamentally the market has the best dynamics, economic dynamics behind it of anything we've had in memory. Right. So I'm very much with the last guest on the notion that, you know, we'll climb a wall of worry and that stocks in general look very, very good here. But I do think there are two issues. And with it, the tech sector is so dominant in the indexes that I think the tech sector is the thing everybody has to watch out for. And within tech, there are two fundamental issues. One is generative AI, as you say. And the issue here is really simple, that the industry decided to commercialize a technology before it understood exactly what the value was. And they're commercializing it at an unprecedented rate. Microsoft is committed to, I think, $100 billion worth of investment in facilities to support generative AI. That would make a ton of sense if we already knew that in corporate settings, this increased productivity dramatically. The problem is that the evidence is exactly, at best, neutral, and I think at worst that generative AI actually destroys productivity. We see this in some very conspicuous places, specifically at Microsoft, relative to the Copilot apps that they were attaching to every part of their Office suite. And to me, this is one of those things that may resolve itself favorably, but it should cause us all to have a moment of concern because tech is such a huge overweight within all the indexes.
Yeah, all right. But there's an idea that ultimately if you build it, they will come. I mean, we've had various senior executives on those conference calls, for example, simply say there's no question we have to be there and we will spend the money necessary. Why do you think it destroys productivity? What evidence do you have to support that contention?
So here's the simple way I think you need to look at this problem. So for about 40 or 50 years, people in artificial intelligence have talked about this notion that if you get a large enough data set to train on, that will eventually take you to AGI, some kind of artificial general intelligence. The problem with that logic is that we have passed the threshold at which that was supposed to happen numerous times over the last decades. And we're running the same experiment over and over again, expecting a different result. I think the fundamental problem with generative AI is that it was designed to convince people it's human, to pass a Turing test. It has done that magnificently. The problem is that the best way to do that is with BS. And so they've created a technology that doesn't, in fact, give you answers that are reliable. It gives you what they call hallucinations, which are basically things that the system makes up. And when you look at that, the point here is not that there are no useful use cases of generative AI. It's that they're spending money that assumes that every use case will be useful. And that's just not how it's turning out. And, again, it's a speculative bet. I don't think the burden of proof is actually on me to suggest that it's not going to work, but rather on the people who are promoting it to demonstrate that it is going to work. And you see people stepping back. You saw Mark Benioff just yesterday, I believe it was, talking about moving the goalposts again. That, we're not really going to have the same level of productivity we promised you 6 months ago. We're going to try to do this a little bit different way. We're going to change the architecture. And a lot of these guys are looking at their P&L and realize they're going to get hit with really big depreciation numbers because the rates of investment have been so high. And it turns out this stuff depreciates really quickly. So if the value isn't there right away, it's going to be a ball and chain around people's necks. And given how overweighted tech is in the indexes, that's going to be a problem. And again, I don't know that that's going to happen, David. I just think that's what the risk is. And whenever you're having a great bull market like this, you're supposed to be asking questions like that.
Yeah, I get it.
Separately, I wanted to ask you about the regulatory back and forth now between Google and the DOJ, because I know you spent so much time looking at this. So DOJ put out some of the potential remedies and recommendations, and one would be to break up the company. And then Google responded. Leanne Mulholland, who's the Vice President of Regulatory Affairs, put out a blog post, and they'll have a chance to do a more formal response. But in that, I thought it was interesting that she used AI as a central part of the argument that, A, there's a lot more competition when it comes to search, and also that the stakes are so high, and it's so vital, they say, for the government not to put their hand on the scale here at a moment where global competition is so fierce. And I just wonder if it shows, first of all, how Google might use AI and Alphabet and the stakes here in its defense to, the government when it comes to this fight, and whether that's valid.
So I think the way I look at this problem is to just recognize that the second issue investors need to focus on is politics. We are 3 weeks away from the presidential election, and the choices are binary. On the one hand, you have somebody who was part of the administration that helped to create this incredible economic environment that we're in right now, which has been so great for investors. And on the other side, you have somebody who's talking about imposing tariffs on all imported goods, and who's talking about forced expatriation of millions of people who live in the United States who've come from other countries, including people who are actually citizens of the United States. And that is a scenario in which I think the economy suffers really badly. And we're faced with that in 3 weeks. And relative to Google, they're looking at this, and I think the whole tech sector is looking at this and going, wow, if Harris gets elected, she's probably going to continue the antitrust policies of the Biden administration, which personally I favor, because I do think that the tech industry has been wasting its energy on a lot of industries like generative AI that are not, in fact, going to put America in a strong position. They don't address climate change. They don't address public health. They don't address education, any of the real issues that America faces today. And I do believe that the tech industry has lined up behind Trump, either very visibly in the case of Elon Musk and Mark Zuckerberg, or less visibly, as in the case of people like Google. And they're very much of the view that their economic self-interest, it's like the French king used to say, l'état c'est moi, the country is me. And, their perception is that if anything happens to harm them, that's going to be bad for America. My view is exactly the opposite is true. I think that there's so much value inside Google that if you broke it up, you would unlock massive opportunity to be really, really good for the economy and really great for investors.